Hello, this is teacher Budoor Al-Elu, and today I'll explain unit 1 from accounting 716. It's about closing entries for temporary accounts, and to isolate this thing, we will solve this exercise. First, we have to know which are the temporary accounts. Temporary accounts are accounts from income statements, which are expenses, revenues, and from balance sheet drawings and adjusting the capital. So any other accounts which are permanent accounts will be cancelled. This is first thing. So step 1 of doing closing is to close the revenue. So all the revenues are carrying credit balance. To close them, they have to be on debit balance. So I'll start with the date, which is October 31st, or it depends on the date of closing the accounts. So it could be any cycle, depends on the business cycle. So now for here, it's October 31st. So I'll write the date, October 31st, and I close the revenue. I'll start with the revenue, as revenues, as we say, the revenues carries credit balance and it should be on debit side. So service revenues by 10,000, and I close it to a key account or new account called income summary with 10,000. And then second step is to close all the expenses. Now the expenses are carrying debit account, so they have to transfer to credit side. So we have to begin with the date, October 31st, and then the debit will be for the same key account that we established here. It's called income summary, and then the credit will be for all the expenses, which are here salaries and wages expenses, salaries and wages expenses. Credit for 4,000, and then the rent expenses for 900. So the total will be debited to income summary, which is 4,900. Step 3 is to close the income summary, as this account is only a temporary account and should be closed. So to decide in which side it should be, debit or credit, we have to do very simple thing. We have to take this number for income summary here and the other number for income summary here and do subtracting. 10,000 minus 4,900, it will be 5,100. And now we have to decide which side is this one. Is it debit or credit? To decide on that, we have to see which side here is the poorer. Here we have 10,000 bigger than 4,900. So the poor one is this one, the debit side. So this one should be on debit because it's the poor one. So my entry would be October 31st, the debit for income summary by this amount, 5,100, and the credit will be for capital, as I am adjusting the capital here by 5,100. Last step is to close drawings. On October 31st, I have to see the drawings here. It carries debit balance. For closing, it should be on left side or on credit side. Okay, so drawings will be on credit, so I have to close this one with what? With capital also. So debit capital with 500 and the credit drawings for 500 too. So we are done. The most critical thing that I have to mention here, that this entry is fixed and this entry fixed also. This one also fixed, except this one. It depends on which side is the poor side or which side carried the smaller amount. So if the credit was the smallest, okay, then the income summary will be on credit. But if the small side is debit, so income summary will be on debit. Thank you.